Aloha, everybody. Welcome to our Hamby webinar this morning. Thank you, everyone, for being with us today. We have our webinar with VIP Mortgage and Scott Searcy, and he has also brought his underwriter, Jeanette Hatzinger. So let's chit-chat a little bit while we wait for everybody to get on and log in with us. So, Jeanette, where are you joining us from here today?
I'm from Wisconsin.
Oh, okay. How is the weather in Wisconsin?
We're actually getting a little bit better. We're in the 50s today.
Awesome. And then when do you generally get a spring, full-on spring where things are kind of warming up?
A couple of weeks ago, we were in the 80s. Then Monday, we had snow again. So hopefully we're on the up and up now. Now, hopefully we'll keep improving.
Awesome. Well, thank you for sharing that with us. And then Scott, you are on the Big Island.
Yes, I am, right outside Hilo.
We had a ton of rain yesterday with thunder. What about you guys?
Sunshine all day yesterday, which is kind of weird, right? Normally we're the ones with the rain, so.
Oh, awesome. So Scott, what do you like? Obviously this is a challenging time in the industry. We are working our butts off right now. What do you do when you are not working your butt off?
Well, I've got 3 dogs that keep me pretty busy. I've got 4 kids, 2 of them still living here with us. And, just for enjoyment and relaxation, I like to do woodworking. Like make picture frames and some furniture and boxes. Here, I have a little box that I can show you that I put together.
Oh, wow.
So this one's made out of koa.
Oh, very cool.
That's kind of stuff I like to do.
Oh, so awesome. And then, so little boxes, what about like chairs and tables and?
Chairs, I've never attempted a chair, but I've made a few tables. Chairs are those are rough. They have a lot of pieces and it's a lot of time to get one done, versus making a whole big table. So, but maybe someday I'll make a chair. We'll see.
Where do you get your koa?
I know a few people in and around Hilo that know, where trees would need to be taken down for one reason or another, like the koa wood, we try to always, not harvest prematurely. So we look for, different types of wood that come from those sources. So yeah, just all locally grown, stuff here that I'm able to pick up here and there.
Awesome. What about you, Jeanette? What do you like to do when you're not working your butt off?
During the summer, we have a speedboat, so we like to hit the lakes a lot. And during the winter, just try to stay warm.
Awesome.
I was going to say, as an underwriter, you probably don't have any free time, right?
No, I really don't. Especially the past couple of years.
Yeah.
Awesome. All right, you guys, it is about 10:04 right now. So let's go ahead and get started because I know that for all of our attendees, time is super important to them. So, all right, everybody, welcome to VIP Lending. And we are here with Scott Searcy today and Jeanette Hatzinger. They're going to talk to us a little bit about their programs and their products. But in addition to that, let's go ahead and take a moment to my name, of course, is Judy Meredith. I'm the Vice President here at Hamby. And we'll take a moment to thank all of our sponsors for being a part of Hamby and making this association great. Acra Lending, Angel Oak, Bank of Hawaii, Champions Funding, Finance Factors, Freedom Mortgage, EV Costa with Mutual Underwriters, and of course VIP Mortgage Wholesale Lending Division, which is with us today. So thank you, Scott, and thank you, Jeanette, so much for being with us here today. We're looking forward to your presentation. So go ahead, and I know you've got your screen up already. So go ahead and let's kick it off and go ahead and introduce yourselves a little bit and go ahead and shoot into your presentation.
All right. My name is Scott. I'm an account executive with VIP Mortgage. Been with the company a little over a year now. I have been in Hawaii since 2000, so 23 years doing this. I specialize in USDA loans. I probably have closed probably like 100 million over the years in USDA loans, so I have a lot of experience in doing that. Can navigate some of the problems that can arise. We all know that we have challenges in each mortgage transaction, and so there's always more than one way to get things done. I used to be exclusive USDA. Of course, VIP handles all of the different loan programs, your conventional VA, FHA. So that's kind of where I'm at. I'll introduce Jeanette Hatzinger, who's one of our underwriters at VIP Mortgage. And Jeanette, I'll let you talk a little bit about your experience and whatnot.
Hello, I've been in the mortgage business for about 20 years. I've been an underwriter for about 15, 16 years. Started underwriting USDA right away, so 15 years ago. Also underwrite for conventional loans, FHA loans, and started VA loans. Yeah, not much to say. I enjoy underwriting for USDA. It's a good program, I believe.
Awesome. Well, thank you for all of that. I will go ahead and turn off my camera now and then go ahead and jump into your presentation.
Okay. Well, first off, if people have questions, I believe that there's a way for you to put your question in, and Judy will let me know that there's a question pending. I just want to, I don't know what everybody's level of experience. My experience in working with brokers is they either know a lot about USDA or brokers don't even know how to spell USDA. So, and I say that in a joking manner. USDA is a program that if you're not familiar with it, you might be missing out on some of the wonderful things that you can do with a USDA loan. Right off the bat, we have it is 100% financing. Eligibility wise, I did pull up a map. Well, here on the island of Oahu, which I imagine most of you are from. I'm going to the links that I put in here. For some reason, they're not going to the actual place, so I'll just show you physically what I'm doing. To get to these sites. Can you see my screen here?
Yes.
With where I'm going? Okay. So I usually just go in there and I just say USDA eligibility. You can go right to a USDA eligibility map. The one thing that you might want to be careful of is if you're ever doing a search for USDA, make sure you're actually going to USDA, because we see we've got Neighbors Bank down here. Typically, it's USDA when you see the USDA.gov, and you can click in here. Their site is actually pretty good. The only portion that is available to lenders and brokers is going to be this tab right here, single family housing guaranteed. Don't try to look into any of these other ones because quite frankly, you can't do them. USDA has a ton of programs, a ton. The last time I counted, there must have been about 100 of them. Farmers loans, there's all kinds of stuff. So USDA is not just the guaranteed program, but it encompasses quite a bit. Going into this link here, you can see property eligibility. and you'll have to accept that. Property eligibility. Okay, so you can actually zoom in on, whoa, what am I doing here? I gotta find Hawaii. There we are, somewhere out there, right? Okay, and then I'll focus in on Oahu. So you can see that the majority of the island, anything that doesn't have this in there, these are all of the ineligible areas. So you can see that the majority of the island, especially right around in this area, Makakilo and Kapolei, Eva Beach, are great hotbeds for USDA loans. So you can see that there is a lot out there to get into. Income eligibility, you can come over here and see the income limits. And I've included all of this stuff in a packet that will get emailed out to everybody. Income limit, you want to just go down to Hawaii is somewhere in here. Might be right there. No, that's Arkansas. Delaware. There we go. This is Hawaii. On the island of Oahu, you can see that it's pretty generous. Now, the way that USDA calculates the income eligibility is it's always 115% of the median income. So for a family of 1 to 4 people, it goes into this bucket and you're at 150,200. If you have a family size that's greater than 5 people, then you're up here at 198,250. These other numbers in here, you don't need to worry about them. There are other programs like the USDA Direct program. The only one that we're really concerned with is the Moderate Income Guaranteed Loan, because that's what we do. If you're doing loans on other islands, please take note that they have different income limits, because remember, it's 115% of the median income for that location. Over here on the Big Island, we're not as high as everybody else is, but our property values tend to be a little bit lower over here. So those are 2 good resources that you might want to hang on to. I have them listed here. If you have a family size greater than 8 people, it is still 198,250. So I don't know why they put the 5 to 8 on there. It should just be 5 plus. Property eligibility, it is confined to what USDA considers rural areas. You might be asking yourself, how is Kapolei and Eva Beach on the list? And that's a good question. The way that they zoned it, USDA can do some crafty stuff. Obviously, we don't want people moving into Honolulu area. We want them moving out to, some of the outer edges, and USDA has made accommodations for that. You can do a condo on a USDA loan, but that condo will need to meet agency condo approval. That doesn't mean that we have to get the condo approved. It means that people like Jeanette has to certify that the condo actually meets the guideline for either Fannie Mae, Freddie, Ginnie Mae, VA. We can take all of these condo approvals to get to the thing done. If the condo is not approved by any agency, as long as we can get the condo docs and it meets certain criteria, and I'll let Jeanette, can answer questions on that if you have any, in regards to, getting an agency approval and what documentation that she would want to see to get it done. Sometimes we run into a situation where there's a lot of homes, especially in Eva Beach, Waianae area. We have single family residences that are zoned as condos. And a good rule of thumb is if you can walk all the way around the unit and there's nothing attached to it, it's zoned as an SFR. So even though it might say condo on your prelim and some of the other documents that will come up, as long as it's an SFR, we don't have to get the condo approval. USDA will automatically realize that that is an SFR. Loan amounts. There is no limit max loan amount. So I get this question a lot. How high can I go on a USDA loan? And the answer is there is no limit. However, we do have income. And so that's going to be your determining factor on whether or not you can get that, that loan approved, regardless of the loan amount. If you can fit into these ratios, I call it the 29-41 rule, any type of manual underwrite, which we do, will require that the ratios be 29-41. If your ratio is 29.01 and we're doing a manual underwrite, that's too high. It actually has to be 29-41 on the back end. The next part I'm going to call the Gus rule. Now, we don't actually know where the as high as you could go, but this is a pretty good indicator, 33-44. I think anything higher than that is probably going to get a refer, in which case you're going to go back to the 29-41. But with good FICO scores and some other compensating factors and whatnot, it's possible to get a Gus approval. And Gus it stands for Guaranteed Underwriting System. It's USDA's version of DU or LP that we run. That is done by our underwriter on site. Typically, they would want to underwrite the file first and then run Gus because Gus can be pretty cumbersome. It's a system that doesn't communicate well with LOS systems. And so anything you do in your LOS, you have to go over to Gus and do the exact same thing. So it's a lot of double entry. But if you're wondering if your file will get approved, we can put it in and get it over to Jeanette, and maybe she'll run Gus and see if we can get these ratios right here. I put together a little scenario here at 198,250, which is Oahu's 5 to 8 people. If you divide that by 12, that's $16,520.83 a month. 29% of that, if you're going into a manual underwrite, you can afford to spend $47.9104 a month. You also, in this 29%, you're going to have to put in your PITI and your HOA fees and any other fees that might be associated with the maintaining that property. For example, over here on the Big Island, we have a lot of road maintenance organizations as well. So there might be an HOA and then there might be an additional road maintenance or something along that line. Those would need to be included into your 29%. So that's a pretty generous. I think you could get a lot of house. We've done loans as much as 800, maybe 850-ish on a USDA on Oahu, and that was with older income limits. So this is kind of a revised one. I haven't seen anything higher than that yet, but I'm sure we will at some point. Hopefully interest rates will come down and that will really help because there's a lot of room to navigate within this number here. Another thing that I wanted to show you is the USDA 3555 handbook. This is our operating set of guidelines that we use. We are pretty much no overlays on our USDA with a couple of exceptions that I will mention here in a little bit. As calculating income can be a little bit, what's the word I'm looking for? Nerve-wracking sometimes, trying to figure out, can I use this? Can I not use this? And whatnot. So I did include, this is directly from the USDA 3555 handbook in the income section. And I did include this for you on the packet that I put together. in here, you'll see it's kind of like a matrix. If you're working with a file that has adoption assistance or subsidy, you can look in here. If it's going to be received for the 12 months, then you can do this. There's all kinds, I think just about every scenario is in here somewhere. Base wages, that's probably where the majority of it's going to be. For most of you, we do see a lot of files with, not with border income, but with bonus income. One of the neat things here is required history. So you need to have 1 year in the same similar line of work, and you can use bonus income if they've been receiving it for the last 12 months. Some of them, like self-employment, is going to require a 2-year history, but I think the most of them are about 1 year. So if you've got overtime, bonuses, commissions, is 1 year in the same or similar. So this is a great tool to look at, especially if you're working with some lenders, because I still see, I get files all the time from other lenders where they tried to do USDA and they got stuck on something. File comes to us, and if you're able to refer to this, you can save yourself a lot of work with sometimes with underwriters from other companies, to where either they just flat out won't do it, or they have an overlay that is causing you to not be able to get that done with them. So I did include this entire packet here. Employment offer, that's another one that we see, especially with teachers that are moving into the state. There's a little bit of legwork to jump through there, because the teachers union will not, or the Department of Education will not give you a written VOE until they actually start. And so there's some navigating that we need to do there, but it is possible, and we have gotten those done. So there's a lot of good information in here. It's kind of lengthy, but it's really divided up, and it's all in alphabetical order. So we went from employment, expense allowance, and then you go to foreign income. So we went from E to F, and then, so if your scenario involves that, just, like let's say self-employment, then you'll just skip down here to where it starts with S, self-employment, and then you'll get the information that you need to know whether that income would be acceptable for USDA or not. USDA is very, they will stick to those guidelines no matter what. So let's say that your income might be $1 over the maximum income amount. That's a dead file if we can't figure out a way to get rid of that $1. I've seen files with USDA where maybe somebody got a large bonus. It was a one-time thing, but that bonus is going to take them over the income limit. That was a heartbreaking file because of that. Move on to, so I'm going to close that out, but just to give you an idea of how to get to this. So USDA, wait, I'm going to do 3555 handbook. You go on here. All right, so you'll end up on this page. Disregard all of these other ones because we can't do them. The only one that you're really worried about is this Guaranteed Loan Program Technical Handbook. Where I got to that income, it's in Chapter 9. You open up Chapter 9, you can see, some of the guidelines, and then at the end of Chapter 9 is this matrix that I was showing you. So it's really easy to, to get the information that you're looking for as far as how to calculate incomes and stuff like that. Because I know you want to get pre-qual letters out to your borrowers as quickly as possible. You may not have time to submit a file. We can do a credit review that will take, a little bit longer than what you might want if you could just readily access the information right here. So There's resources available to you. Sorry, I lost my presentation. Went all the way down too far, didn't I? Okay, here we go. So I've showed you where the USDA handbook, I showed you the income matrix. As far as credit goes, USDA does not have a minimum FICO score requirement. You'll notice that I put USDA specific. That is the guideline. However, some of you may have run into this with other lenders. We won't take a file that's less than 660. Some of them are 620. Most of them are 620 that I've seen. At VIP, we are at 600. USDA has a mechanism to actually do a no FICO score. So let's say that you have a borrower that absolutely doesn't have a FICO score. We have, certain cultures, especially in Hawaii, that don't use the banking system. They don't want that, but so naturally they don't have a FICO score, but they're a good borrower. They pay their rent on time. They have, excess cash and whatnot. So you can do a no FICO score. You're just going to have to satisfy some trade line requirements. That's pretty much it as far as an overview. I would like to open it up to questions. You can direct those to either myself or maybe the underwriter, but I'll open it up to questions now. And maybe if Jeanette wants to fill in any gaps that she's thought of along the way, we can do that as well.
Awesome. Thank you, Scott. Thank you for Jeanette for all of that amazing information. Yes, everyone. So the questions box is open. So please go ahead and start. We're going to give it a few minutes to let all the questions come in. Then we'll answer them at one time. So just a couple of Hamby announcements while we're waiting for those questions. So remember on 5/17, we are so very excited. We've got a joint MBAH Hamby event. We've got HUD in town here in Honolulu, and we are going to be showcasing FHA and VA. We're going to have a seminar with Frederick Griefer, Director of HUD, and Ether Yamashi, with the Housing Program Officer from Santa Ana Home Ownership Center. It's going to be at the Dave & Buster's conference room, and it will be starting at 9 a.m. So check out our website, hamby.org. That's HAMB.org. And from there, you'll be able to follow all of our events. So look forward to that coming up on May 17, just a couple of weeks away from now. And then on May 25 this month, we are having our first Hamby Pauhana for the year. It's going to be held at Pitch Sports Bar in Kaka'ako, starting at 5 p.m. So we are really excited to be talking about that. So once again, go to hamby.org to stay on top of what events are coming towards you. And also, please remember that if you want to get involved with Hamby, we are so excited for our members to get involved. We have a bunch of fun committees that you can join. So we've got membership committee helping to put on those pauhanas. We've got technology helping me here with these webinars. Education, we've got events, our conferences, legislative, if you want to throw your hand in for legislative, and of course, everyone's favorite, the golf committee. So please reach out to your chairs, visit hamby.org, and then let's make sure that we've got a great Hamby year in front of us. And once again, let's thank Scott and Jeanette for being here. We have a ton of questions coming in, so I'll start going through them now. So the first one is coming from Suzanne West with PRMG. Scott or Jeanette, why does the USDA website show, I'm so sorry, let me open this up a little, it's cutting me off. Why does the USDA website show a loan amount? even though there's technically no loan limits?
Jeanette, do you want to answer that question?
I'm not sure on that one, because I know that there are no loan limits on that.
Yeah, I'm not sure which website that you're referring to. Was it, I assume it must have been the one that I was on. Was it the eligibility one, or was it it wasn't the handbook, right?
Suzanne, when you get a moment, would you like to expand on that just a little bit? And then we can direct your question.
Yeah, but I can assure you that USDA does not have a maximum loan amount. Like I said, we've done loans way in excess of the Fannie Mae conforming loan limit. Never had a problem with the loan amount ever.
No.
So.
Okay. Suzanne, go ahead and send a screenshot. You can put that right in the chat here when you get a moment so that we can refer back to that for you. All right, next question from Dave Ige, our president. Does USDA have a one-time construction to perm loan?
That is, yes, they do. And I've done a lot of these. Unfortunately, with VIP, we don't do them yet. It's a program that needs to be developed. It's you have to have everything set in place with builders and contractors. If you want to find out more about the USDA construction to perm loan, you can give me a call and I will try to direct you to who might be best suited to handle that particular loans transaction. We will be getting it in the future. I'm just not sure when. But yes, you can do it. The USDA construction program is a little bit different than some of the other construction programs that you may see, because you start making payments right from the get-go. So as soon as you close that loan, that is a 30-year fixed rate mortgage. The borrower is going to be making full PITI payments right from the get-go while construction is going on. We offset that in some cases, a lot of times, especially here on the Big Island. And this is a neat feature. You can do this on a regular USDA loan, or you can do it on the construction program. But let's say that your purchase price is $400,000, or your building cost is $400,000 to get that home built, and the appraisal comes in at, let's say, $450,000. Okay, you now have $50,000 that you can play with, because USDA will allow you to go up and borrow against the appraised value and not necessarily the purchase price. Now, USDA will not allow you to take cash out. They will not allow you to pay off debt or any of those other types of things. This would be strictly for closing costs only. So the borrowers can truly get 100% financing. If the appraised value comes in a little bit higher, you have that money to work with. I hope that answers that question.
Awesome. Thank you, Scott. We've got not a question, but a comment coming from Darren Ogino. VIP is the best for USDA smart money. Love Scott and VIP. Thank you, Darren.
Thank you, Darren. I appreciate that, sir.
And it looks like from Lori Fukumoto, we've got a update to our HUD seminar. It looks like it's moved to May 16. So once again, just make sure to log in at hamby.org as we continue to organize. Sometimes things do move around, so go to hamby.org to keep yourself updated. And then let's see what else we've got here. Looks like Suzanne commented she cannot locate what she was referring to, but it's all good for her. Scott was great in answering the question and reassuring that there is no loan limit. So that's fantastic. Thank you, Scott. Now, I've got a couple of comments from the presentation that you did that I thought was amazing. So, number one, I love it that USDA is still recognizing detached condos as SFR. So not to muck that up there and cause additional review and things like that. But with condominiums, you know, in conventional world, FHA world, it has really come to light recently, you know, since of course the Surfside Hotel fell down in Florida. All of the channels have basically been going through a lot of reform when it comes to condos. And Fannie Mae, of course, as you know, came out with their 1076 form, which then added the four questions on the bottom regarding any upcoming maintenance and all of that good jazz. That has been, you know, obviously causing some issues with trying to get that information back from the AOAOs and the maintenance companies. Some of them, like Hawaiiana, even saying flat out that they are not going to fill out those questions. So does USDA require that those questions are answered as part of the condo review packet if it's not already on one of the lists, the approved list? And even if it's on an approved list, do you guys require it at that time?
I'm going to let Jeanette answer that question because she's the underwriter and she will be requesting that documentation.
If it's not an approved condo, then we would need a full questionnaire with all the questions answered on there. And then we would send that up to our corporate office and they would review it and give us the approval on that condo. If it's one that is approved, then we're good to go.
Awesome. That is great to know. Okay, and then the other thing that I thought was amazing from your presentation was that bonus income and commission and some of those other alternative types of income can be used after 12 months. Even for myself, I thought that we needed to meet the 2-year plus rule or close to it for an exception. So can you talk to the team, the group a little bit more about that, Jeanette?
Yes, they just require the 1 year and then we just take the average over the year to come up with an income for you.
And then what about if we have the traditional like decline, if they had more bonus last year, what's the guideline there?
If you have declining income, then we can only use your current year, the year-to-date income. We won't be able to average it then.
Okay, awesome. And then the other thing that caught my eye was 600 FICO, Scott. How awesome is that? I mean, almost every lender I know is 640, 660. I've even seen some at 680. So tell us a little bit about your evolution at VIP and how you've been able to remain at 600 and what the philosophy is there.
A lot of lenders set their FICO score requirements based on warehouse lines that they have available to them. Sometimes a lender's guidelines are set more so by the warehouse lines because they won't allow you to put a loan on there with certain FICO score requirements or other types of requirements. I would just say that our warehouse lines allow us that flexibility to go that low. USDA is probably one of the most common sense underwriting loan programs that are out there. You don't have to deal with with FICO scores. Somebody's got a medical judgment showing up on their credit report and it's tanked their FICO score down. That doesn't mean that they're not a good borrower. When we say 600 FICO score, we're not looking for the borrowers that have multiple lates. They're going to have a hard time keeping up with their payments. We're looking at what actually makes sense on this file. USDA, when they guarantee a file, it's guaranteed for a lot more than, let's say, VA's 25%. FHA's 25%. USDA will guarantee these up to as much as 90%, I think. So they're a really safe loan program for lenders like us to do because there's a lot less risk. But my personal opinion, I think that either lenders just aren't familiar with the USDA loan program or they have they have restrictions that are being placed upon them by warehouse lines.
Awesome. Thank you for that explanation. And we've got another question coming in about the loan limit. So I think that, the determination is that there is no loan limit when it comes to USDA, but remember, you've got your income limits. So that ultimately is going to drive that loan limit. So the reality of it is you're never going to get to 2.5 million, right? Because the income limits will not substantiate that. So Scott, do you want to talk a little bit about that in particular?
Well, yeah, with there being no maximum loan amount, there is a line in the sand for every file as to what the loan limit would be for that particular file. It could be driven by FICO score. Maybe we are doing a 600 FICO score, and that comes, the more risk you put on a file, there's probably going to be an add-on for that. That will affect your rate. And so it really boils down to how much can you borrow at a specific rate and still be under that income limit. You meet all of those criteria. There really is no maximum loan amount. It's just what you can qualify for and still remain under that income limit. I hope that answers that. Yeah.
And I think the next question is for Scott and for Jeanette, and it's coming from Dave Ige. What is the most missed information coming from the loan officers in regards to USDA loan submissions?
Jeanette, I'll let you take a crack at that.
I would say there's so many things. I guess like additional income. Like if they're working let's say they're doing babysitting jobs, because we have to verify any reoccurring deposits. So that's always one that's missed. Any additional income that they have, we have to take that into consideration for the annual income. Trying to think of another one.
I think
the question that I get the most is, when you start talking USDA loans with loan officers that aren't familiar with them, the first question that comes out is, do I have to buy a farm? And no, USDA is not a farm loan. It's just a loan program. It was conceptualized to help outlying communities retain their identities by keeping people in those communities. The people were moving closer, for work purposes, into major cities, and USDA developed this program to try to help keep people in some of the communities that are outside some of these major cities. That's pretty much why there. Some other loan scenarios that I get, maybe paying off debt with some of the excess funds. If you say you can go up to 100% of the appraised value, I've seen people try to include things that weren't to be included. It's only for closing costs. So closing costs can encompass buying down the interest rate, which USDA allows you to buy up to 2% as a discount point. However, you might run into some challenges with passing QM because that still applies. So you have to navigate all of those things to try to make the file work. We see that a lot. I see where, we're at 29.5 on the ratio and we need to get to under 29%. And so the first thing is, well, let's lower the interest rate. And you can do that, but sometimes you create this discount point that's unsurmountable because it's causing your file not to pass QM. So, Jeanette, do you have any other instances of things?
No, I think that's the most common.
Yeah,
So I think what you brought up, Jeanette, is really important when it comes to, analyzing income for USDA loans. Is that what people forget is the same calculations that they may use for Fannie or FHA, and deposits and things like that would be considered unusable income. Technically, when you are looking and underwriting for a USDA loan, that you're going to hit them with all of that additional income that technically they wouldn't be able to use in order to qualify. So maybe
Exactly.
expand into that a little bit, because I think that's a great concept for USDA, that you're calculating the income conservatively, but yet at the same time you're hitting them for excessive income. So maybe expand on that.
Yeah, so like my example with the babysitting job, it's not something that we can use to qualify them for, but it is income coming into the household. So USDA wants us to include that in the compliance income, which that could possibly put you over their limit. And that can be for anything that comes into their checking account, if any kind of side jobs that they do. Just anything like that that's coming in, that's reoccurring each month.
And
yeah.
household income, right?
Oh,
Is
sorry, I was just going to add to that. One of the things that USDA requires on files is they want to see a couple of months worth of bank statements. If you don't have to have money down and you don't need any closing costs, you may ask yourself, well, why do they need to see bank statements? Because there are no reserve requirements either with the USDA loan. They are actually looking for income in there. You might be getting interest income. You might be making large deposits, and those are all a sign that there's potential income involved in that. USDA has, I always, I don't think this is the official way to say it, but USDA has two ways of calculating income. You have an income to see if you're over the income limit. So they're going to use anything and everything to calculate that income. And then you have your ratio income. This is what the borrower's actually qualifying on. So those two incomes can be different. In Jeanette's scenario, that babysitting income might take them over the income limit, but it wouldn't be included in their ratio income. So that's probably another area that we have to watch out for. I've seen a file with USDA, a borrower, we had like a 3-year history. Borrower made like 30 bucks an hour, working for a union. I think it was over on Maui. They were involved in building roads and stuff like that. They ended up getting a contract where the borrower worked 3 months only, and was getting $50 an hour, and that contract had ended. But that income was enough to take us over the income limit, even though that borrower, we could prove it one way, up one side and down the other, that borrower was not making that income, but USDA wouldn't allow that file to go through because that income had taken them over the income limit for that calendar year. And fortunately, we were towards the end of the year in that scenario, and we just waited until January and then recalculated, or a couple months into the new year, and recalculated it based on what the borrower was actually making at that time. So USDA can be very fickle when it comes to income, but in most other areas, they're actually very reasonable. So hope that answers that question.
I think that another question that I would have would be, what about, because clearly USDA is household income. And on the loan officer side, we have customers that will say things like, well, maybe my mom won't move in with us, right? So is there a mechanism that you guys have in place for checking for household income and whether or not household members were included?
Well, yes and no. We're going to underwrite what's presented to us, okay? However, certain documents like bank or tax returns, could set off some red flags that there might be more income in that household than what is being presented to us. Could be the number of dependents, showing up on this. I get this a lot. Borrower, we're a household income of 4, but we have an expected mother. So we're technically 5 in the household. And the answer to that question is no, you can't do that unless the baby has actually been born. But I've seen that a few times, and that's, you can track that. Your tax returns have all of your dependents and social security numbers and stuff like that. So if you're claiming that somebody's in the household as a dependent, that could set off a red flag. But typically, we're going to underwrite what's been presented to us. I always, try to add my little spiel. This is a USDA federal loan. You don't want to do or say anything that could potentially come back and be considered fraud. So as far as that goes, just, be careful with that type of stuff. Try to represent the file the way it really is, all of the household members. There is a form that's filled out specifically on a USDA loan. It's a household addendum, income addendum, that lists all of the people and their income sources into the household.
Awesome. And then for everyone on the call today, Scott has some giveaways, so make sure you stay until the end. We're going to do a little bit of giveaway. Let's take a couple more questions, and then we'll segue into the giveaway fun. So next question is coming from John Forsyth. Does VIP lend on single and double wide manufactured homes?
Yes. The answer to that question is the manufactured home has to be brand new. It has to be HUD certified. So you wouldn't be able to, buy an existing manufactured home. Typically, you would have the lot, you would have the home put on that. And that would actually be different than a USDA construction loan, because those loans can actually be done rather quickly. The home, you have the lot, the home is installed, we get the thing, and usually these things can take place during the loan transaction. I did see a manufactured home seller refuse to do anything until they got paid outside escrow. I can't remember exactly what we did to overcome that obstacle, but we're pretty good about overcoming obstacles with USDA files if they can be overcome. Sometimes our hands are tied and there's just nothing we can do. But yes, you can do a manufactured home on USDA. Now, as far as the single wide, Jeanette, has that changed at all?
No, I don't believe we do single wides.
Yeah.
I know on the conventional and FHA side, we don't do them.
Okay. And that might actually be an overlay for us. I did mention that we do have a couple of overlays. One of them is going to be the 600 FICO score. We don't do the construction loans yet, and as far as the manufactured home, I don't know if that's an overlay or if that's a USDA guideline. I'll research that question and email Judy back so that we can get it out to all the attendees.
Awesome. Next question would be, does VIP do USDA renovation loans?
USDA does have a renovation loan. You can include the cost of certain repair items into the loan amount. I believe that cap on that is $10,000, so it doesn't really give you a whole lot to work with. In addition to that, post-closing, this isn't something that you see, but it's something that we're very interested in as a lender, is getting that that loan note guarantee from USDA after the loan is funded, and we have to send a package over to them and to get that back. If we don't get that back, then we have a loan that technically isn't saleable. I say all that because a lot of these repairs need to be done within like a 30-day period. And they also require an escrow holdback. And right now, VIP is not doing the escrow holdbacks, so that would not be an option for us. But it could be an option for, another lender. The renovation on those, you're looking for strictly like items that can be fixed quickly. We've done these in the past, and sometimes we get back, we need to replace the carpet, and typically that sounds like a pretty easy thing to do. Only takes a couple of days to get it done, but is the carpet available here in Hawaii? In that particular case, it was going to take 6 weeks for the carpet to actually make it to Hawaii, and then to get installed, would be another couple, but it was way too long. I think a lot of lenders wouldn't allow you to do any kind of renovation that would require tearing any walls down or uninstalling certain things, because those always lead to more problems. We want to stick, as close as we can to the appraisal and fix the things that need to be fixed. USDA's policy is like, let's say I don't like the cabinets and I want to install new cabinets. That's a functionality issue. USDA would probably decline that one unless you could demonstrate that the cabinets are not functional. So there are little things to get in and out of that, but yes, they do have a renovation loan. Are we doing them? No. And I haven't seen a whole lot of cases where it was even viable. So.
Thank you so much for that, Scott. And then as you guys can see, folks, Scott and Jeanette, what an amazing team. Such a wealth of knowledge. Definitely reach out to Scott with any questions that you have that we did not cover here, and any specific scenarios that you may have. We'll be sending out his information right after this webinar along with the recording. And now to the fun stuff, Scott. What giveaways do you have?
Well, we have 5 $50 gift certificates that I will, once the attendees are chosen, and I think that that's something that Judy will probably, hopefully will, I don't even have the attendee list in front of me, so I don't even know. But the $50 gift certificate will be your choice. You just tell me what you want a $50 gift certificate for, and I'll make it happen for you.
Well, let's have a little fun with this, Scott. Why don't you ask some questions? So your theme today was graduate to greatness with VIP Mortgage. So let's test their knowledge a little bit. Go ahead and ask a question, and then whoever answers first in the chat box is going to win your first certificate, and so on. So what are some of your questions that we can ask? What about where is the break period? When you have your income loan limits, it is X amount of family members, and then the next break would be X amount of family members.
The break in that is between 4 and 5 in the household. So from 1 to 4, you're going to be with the lower income amount, and anything greater than 5 people in the household will get that larger amount. And as I mentioned earlier, let's say you have 9 people in the household, you're still going to use the 5 to 8 family members. USDA doesn't have a limit on the number of family members you're allowed to have in the household. However, you're buying a 1-bedroom condo and you're putting on the application that 9 people are going to live in there, we're probably going to start asking some questions, and USDA probably will as well. So there needs to be a functionality element to that as well. So.
Scott, you just won your own gift certificate. Jeanette, can you help us come up with some questions that maybe the loan officer can answer to win these prizes with Scott?
What is the DTI rule for USDA?
Excellent. Oh, Suzanne West came in first, 2941 manual and 3344 for Gus. So
Perfect.
congratulations. Yay, Suzanne West with PRMG. Woohoo!
Yeah, that is the correct answer. I just want to don't get hung up on 3344. I get this a lot. A broker will submit a file at 33% on the front end, and then their file gets referred. It won't go through Gus for one reason or another, and now we're stuck with 2941. I would use that 3344 very loosely in sending out your pre-qual letters, because there's no guarantee that you're going to get that. In addition to that, the 3344 is not an official number. We don't know what the thresholds are for USDA's GUS underwriting system. They don't tell us, and so sometimes I've seen files go through that, let's say we had a 620 FICO score, borrower has absolutely no money, and GUS approves it, and that borrower gets, we're able to get a 30, front end ratio on that. And I've seen files where borrowers had 720 plus FICO scores, and we just couldn't navigate past the refer, and that also affected that file. So just because your borrower has a great FICO score, there could be something else in the credit profile, bank statements, the reserves, and I know I said reserves are not required, but sometimes they do help when you have some reserves in there when you're running GUS. So 2941 is the rule. Be careful with the 3344 because it's not really a real number. Use that carefully. We can, like I said, we can do a credit approval where we'll run GUS for you with the income, just to see if GUS will take it or not, if you really need to try to get those higher ratios. But I would never plan on doing a pre-qual letter with a 33 front end ratio without it going to an underwriter first or without running it through GUS first.
Awesome, great info. So is that a win for you, Jeanette, on that answer?
That is a win.
Okay, excellent. All right, question number 2 for a number 2 prize.
Scott, you want to take that one?
So we're going based on the information that we presented, or do you want me to come up with another question?
What you presented would be great just because it was the educational piece that we just presented. But feel free to inform, so feel free to be yourself.
If you're Googling USDA eligibility, what are you looking for in the link to make sure that you're actually going to the USDA website?
You want to try ask the question one more time?
Yeah, if you're, let's say that you're trying to get information on a USDA loan, so you type in USDA eligibility, what should you be, because a lot of things are going to pop up, what should you be looking for to make sure that you're actually getting the correct answer and not going to some lender's website?
We've got an answer from Dave Ige, USDA.gov.
Exactly.
Yay.
Okay, perfect. We've got another answer, came in behind, but we've got another answer, which is from Wade Nakasone, which is the disclaimer.
The disclaimer, okay.
So it sounds like we're going to go with USDA.gov. It came in first and is representative of what you were looking for. Okay, that goes to Dave. Woohoo, Dave, congratulations.
Yay.
Okay, question number 3 for the third gift certificate from Scott and VIP Mortgage.
What is the income limit for a household of 5 to 8 people on Oahu or Honolulu?
Go for it. Quick on your fingers. Go for it. Dave Ige at 198,250. Let's let someone else win this, Dave. You just got one.
Mm-hmm.
Someone else on the call. Wade Nakasone on 198,250. So let's make Wade our third winner. Thank you for bringing that up. And then fourth question, Scott, Jeanette.
What is the handbook called that contains the USDA underwriting guidelines?
Members, it's open to the forum. It's free for anyone to answer. Darren, HB-1-3555.
Yeah, 3555 handbook is what we refer to it as. So remember that number, 3555. I have gotten calls from brokers in the past that have met with borrowers, that have met with USDA on the direct program, and there have been some, the borrowers saying, well, USDA says I can do this. And they show you the guidelines that says that they could do that because it might actually be the guideline for the direct program. But for the guarantee program, it's always going to be the 3555. So in those types of cases, you go, well, okay, well, what handbook is that coming from? It's the 3555, and that's the one number you need to remember with the guarantee program.
Awesome. All right, that went to Darren Ogino. And final last question for VIP, and the answer goes to our 5th winner tonight. Go ahead, Scott, what's your last question?
I'm going to make this one a hard one. So how long does a borrower have to have commission income for us to count that commission income into their ratio income? Because remember, I said that there's the household income and then there's the income that we use for qualifying. I should have said qualifying income. So what is the required history on commission for a borrower to have in order to have it count as their qualification income?
It's open to anyone. Members, we just talked about this one. It's for $50. All right, we've got Linda Shar, 1 year and 12 months.
That is correct. That is correct. And that came directly from the matrix that's in the income section in the 3555 handbook. So, and like I said, the email presentation the presentation that was given today, we'll get all of the attendees. I'll make sure that you have this matrix and then the income limits. You can post that up on your desk so you'll have it for easy reference. The only caveat that I would add to that is USDA does periodically change their income limits. They could do it. I've seen them do it in the early parts of the year. USDA has a fiscal year that ends in October. That's usually when you're going to see guideline changes, but I have been surprised because a lot of these required histories used to be 2 years, and USDA kind of snuck them in there. So you might want to double check. Don't have anything hard copy. Go to the website, look it up, make sure that it's still what we think it is. So I've seen underwriters surprised as well. We had a file one time where we were working, and the guy had overtime, and the first thing out of my mouth was, yeah, you have to have a 2-year history. And I don't know why, but I was going through the matrix. I called my underwriter, and I'm like, did you know that this changed to 1 year now? And she goes, no, I didn't. And we went in there and looked, and sure enough, yeah, it's 1 year now. So you always want to double check, online, in the handbook, to make sure that you're getting the most accurate information. So.
Awesome. Thank you so much, Scott. Thank you so much, Jeanette, for being here with us today. Thank you, members, for being here with us today. And let's give a round of applause for Scott and Jeanette, and we'll see you at the next HAMBY event. Make sure you go to hamby.org to see all the upcoming events and join us. We love it when we're all together. What a great event. Thank you so much, Scott. Thank you so much, Jeanette. Thank you so much.
You're welcome. And
Thank you.
yeah, thanks for having us. We really do appreciate it. And I'm always available for questions. If you have a question that pops up after this, just give me an email. I did put my email at the top of the thing here. Jeanette's email is there as well. If you have any questions about USDA, just email us, or you can call me. My number is area code 808-372-3842. In case you can't find that number anywhere. It should be on my emails, but.
Awesome. Thank you so much, everybody, and we'll see you on the next one. Bye.
Bye.
Thank you very much.